Good morning. Welcome to Core Services and our Core Belief Series, Why It Matters. I'm John Coggle. I'm the Director of Association Accounting for Core. And today we're going to be discussing three key audit terms you need to understand in order to be able to work effectively with your external auditor. A little bit about Core Services. Core Services is focused on audit and review services for the common industry realty associations, which are condos and HOAs. We enjoy working with boards, especially association boards, to help them understand and be able to rely upon their managers' financial statements. We have over 40 years of combined experience in auditing and helping accounting for associations. And we also offer advisory services. We can help boards understand transactions, help them make sure they get transactions recorded correctly, document in their minutes, and help evaluate, say, managers and other vendors. We also do vote supervision. Basically, anything that doesn't impair our independence, we are more than happy to help boards help them be successful in overseeing their association. So as we get going, I think one of the most important things to understand is the audit concept. So when your auditor is working, this is what they're really trying to get to in a financial statement audit. They're looking for overstatement of assets, an understatement of liabilities, overstatement of revenues, and an understatement of expenses. So consider it a yin-yang approach. We're looking for overstatements of debits, overstatements of credits, understatement of credits, and understatement of debits, depending upon where we're at in the financial statement. So we are trying to hit everything. And so where it's really important, this is why materiality is so important, because it helps the auditor focus their energies on things that might actually have an impact to the financial statement. So when we talk about those three key terms, when you're talking to that auditor, what are they? What do you really want to understand? And those are, believe it or not, materiality, tolerable misstatement, and individually significant items. Each of these have a meaning when it comes to the auditor, and you as a board, as a director, need to understand what they're talking about. And materiality is that high level dollar amount that the financial statements can theoretically be in error before the reader, the owners of your association, could be making bad decisions. To understand, it is a subjective number. The auditor chooses how it's calculated, and a percentage that goes into this. So it is somewhat subjective. It's based upon the auditor's judgment. And even though, and it's important, it is quantitative, but still based upon professional judgment. That tolerable misstatement is simply a recognition that financial statements, no matter how well an audit is performed, could still contain accounting errors and irregularities. So it's a buffer calculation. It says if materiality is here, what is the potential amount of misstatements that could be in there that I won't catch? And so I want a lower number before I require adjustments. And then we have that an individually significant item, which is what we use to determine detailed audit testing. So when we calculate materiality, and almost all firm does this about the same way, but it is based upon firm policy, we use the greater of total assets or total revenues. And then we multiply that by a factor. In this case, our policy is to use 2% of the larger of the two numbers. And that gives us our materiality, or the dollar impact of a potential misstatement on the financial statement. The big number that we actually focus on, and is actually what we would consider our materiality number, is tolerable misstatement. What is the amount that we could allow up to before we require an adjustment? And it is in fact a lesser percentage than the materiality. So we provide a buffer number. In this case, we use 25%, and we subtract that from the materiality number to give us our tolerable misstatement. This is the amount that, as we accumulate the accounting adjustments, that we basically can live with before we require a journal entry. And that individually significant item are the individual transactions, or potentially even account balances, where we are not going to do additional procedures unless we start catching a lot of errors on the larger items. Where this might come into big play is with a condominium association with a special assessment. We may decide to send out a confirmation to the owners, and we will base that on the individually significant item dollars that were calculated. So anyone who had a balance under, in this case, 3,375, we would not send a confirmation to. Everyone above would get one, and it would basically ask them to confirm that they owe whatever amount that management said that they still owed on their special assessment. We also use this on the liability side when we're doing what's known as a search for unrecorded liabilities. We would ask management to provide a copy of every invoice over 3,375 that came in that they recorded after January 1 and through the date of our audit procedure, which might be March or April. So we don't have to look at every small invoice that came in. We'd look at the material ones to make sure that they were in fact recorded to the correct period. If January of the following year was appropriate, we'd leave it alone. If it really belonged in December, we would accumulate that and maybe require management to make an adjustment to put those in the right year. So I hope this helped you understand that the basic audit terms when you are talking to your auditor and their impact to you and your associations. If you have questions, feel free to go to our core-acct.com account, and we have a contact form. You're more than welcome to click on it and send us any questions. We're happy to answer either by email, or I'll probably end up creating a blog for it. You can also contact us on Twitter, and you can find Doug and me on LinkedIn. And you're more than welcome to also contact us through there if you have questions. We'd love to be able to help you. We want to be a resource to you and your boards as you make decisions regarding your association. Thanks a lot. Hope this has been helpful, and we look forward to talking to you again.